Yo, the market is attempting to rebound. Will it sustain itself? 2025 started off slow but picked up its pace. I'm going to show you how to read this thing here. We're going to do that every single week. It's Stocks and Hip Hop. If you've had a lot of trouble reading this chart, I'm going to show you how to do that very simply. So make sure you stick around to the end. I will also give you my recap on the entire market. I have been helping people learn how to read charts very simply for a very long time, almost 20 years, and I'm going to show you how to do that. So make sure that you hit that subscribe button. I do this every single week, and we do it with simplicity. Now, if you had that struggle, I can show you the pain points, and we will get to it right now. Let's do it. S&P right now, before the market opens, is at 6,049.24. Last week when we did this, we had our two price targets, and we've hit the upside targets of each of our reads from last week. So how do we do this so simply? First thing first is we look from the left to the right, and this is looking for an uptrend. So as we zoom in closer, this is also my weekly chart, by the way, if this is your first time. If you zoom in closer, you can see that we had a 20-day moving average. Last week I indicated how we were pretty close to that 20-day moving average, and we need to rebound off of that. Now, all we do to read a chart very simply is we look at how it has performed in the past. Past performance isn't always indicative of future performance, but, and humans are creatures of habit. We tend to do things habitually. And if you look at the price, every time we've touched this 20-day moving average, we've made a bounce. We've had a little bit of a slowdown, and then we've had a recovery with a huge candle there, and we are back up to where our price targets were for our upside last week for 6,000. So where can we go from here? Let's keep this simple. We keep our two price targets, and this is how we always look for how the market is going to perform. So we're at the 6,000 area. We have a record high of almost 6,100. So record high. That is going to be our upside target. Upside target right now is 6,100. This is where we fell from before we went back down to our 20-day moving average, and we are getting closer to there. So we're getting close. We can have a target of that 6,100 for the upside. Downside target is if this 6,000 does continue to be a pain point, because we've had resistance at this area before. We got slightly above it before it went down, and we are still chugging along. But if this does continue to be resistance, we can look for a move to come back down to actually retrace right back to where we just came from. We worked hard to get there, and we worked hard to get up to where we're at right now, and this could easily come back down to where we just fell from. So downside target is around at 5,800 5,800. All right, so upside 6,100, downside 5,800. That's the S&P very simply. All right, and we track the Russell using IWM. So ticker IWM right now before the market opens is around $229.79, and it's pretty flat before the market opens right now. As we take a look closer, I've indicated to you before in the past, if you have not, this has been a cup and potential handle, and this could actually rocket if this does take off. All right, so small caps have a chance right now for a very, very large move if this large pattern does play out. But as it is right now, last week we talked about how our price targets for the upside were around 220. We've gotten much higher than that, and our downside was actually to stay around that 210 area, but we bounced higher. We hit off of this 50-day moving average, which is something that we talked about last week as well, about how usually when stocks fall from their 20-day, they usually go to the 50, and this one is no different from any other chart that we've read. So now that we've gotten back above 220 and we're hanging around this 230 area, we would like to look at what's happened at 230 before. And if we take a look in the past, we've gotten here in 2021 when we were at 230. We've seen that this has been resistance before. So where can we go from here? Let's make our two price targets. We are currently around this 230 area. It is shown to be resistance in the past. And we have a strong uptrend right now trying to push that price higher. This is where things can get difficult when we try to read our charts. But we would like to, look at the current trajectory of stocks. Since we are pushing up, chances are that we will like to put pressure on this 230. So our upside target right now is to remain close around this 230 area. If we can do that and put pressure on that resistance area, we will likely continue to move up. So upside target is actually remaining pretty flat around this 230 area, 230 to 232. Downside target, if this does become resistance, you can see in the past that we've chopped back and forth between 220 and 220 to 230. We've chopped back and forth before. So history can repeat. This could move back down to around that 220 area. So upside target right now is to stay close to this 230 to 232 area. Downside target is if this does come back down to around this 220 to test out that support area and remain range bound. Next on the list, last week we used the diamonds. This week we're just going to go back to regular old Dow Jones. So $DJI. All right. $DJI is the Dow Jones, and that is at 44,025. And closer look, zoom in, show you how to read these, right? Left to right, we can see that we are up. Trajectory looks good. Last week we talked about how we closed below that 20-day moving average, and that the likelihood of this coming back to retest its 50-day was pretty strong. Well, that made a reversal, right? Because this is also a line of support around this 42,000 area. Support made its bounce, and we are back near the highs. So we are back near those highs. Our target last week was 43,000 area, and we clearly made a move above there. So where can we go from here? All right, let's talk about what our two price targets are right now. We always do two because you never know where the market is going to move. If anybody tells you different, just be aware that the market is under no one's control. All right, and that's why we do our two price targets. Price targets right now, just like the other indexes, we are close to our record highs. So we're going to say our record high is our price target right now. So around that 45,000 area. I don't know why I keep jumbling up on the Dow Jones. But 45,000 area is the upside target since we've had the momentum from our support. Downside target is if this does continue to be resistance in this area, that we can come right back down and retest around that 42,000 area. So upside target is the record high area of 45,000. Downside target is 42,000. And lastly on the list is the hot boy of the century, the Nasdaq. Nasdaq is at 21,566 before the market opens. And we can see clearly that we had that cup and handle we've talked about so many times. It broke out and it has moved higher. Now, as we zoom in, we can see last week how we talked about the 20-day moving average being not that great of an indicator of support. We can see very strong violations before in the past, and it was not dependable for a bounce. This time it has made a bounce off of it, and we're back near those record highs. We talked about this bearish engulf, and what we need for this to be a confirmed signal is a close below the support area, and this is around 21,000. So where can we go from here? All right, let's get our two price targets. Nasdaq right now is pretty close to its record high, so anytime you are pretty close to them, we follow the trend, right? Upside target right now is the 22,000 area. Upside target is 22,000 area. This is where our record highs were, where we fell, bounced to our 20-day, and now we return back to there. Downside target right now is if this does continue to be resistance. We can see that we've gotten here before, shown some type of resistance a couple of times, and it is back near that top area, and it could be resistance. So downside target is returning back to where we just came from, right around that 21,000 area. So upside target is record highs around that 22,000 area. Downside target is the 21,000 1,000 area. So let's go ahead and wrap things up right here. Okay, we got the S&P right now also sniffing. We have the S&P right now sniffing its record high out. So we're looking to see if the upside targets are going to uphold for the end of this week. Downside targets have not been activated yet. So we're looking to see if the continuation of the upside for 2025 will go on. All right, we have IWM right now is showing a signal of a cup and handle. And we've seen before how cup and handles work. If you haven't, make sure that you check out the videos of the past. Cup and handle is a very, very powerful pattern, and it can signal a strong move to the upside, but we need confirmation. So IWM right now is on watch. We're looking for a strong close above 230 for that. Dow Jones right now is also near its record high, so we have the upside targets for those. And then we have the Nasdaq. The Nasdaq has been the one pushing the stocks higher, and we are close to our record highs for that one as well. We bounced off the 20-day moving average, and we are looking to see if that momentum can continue to go higher. So what do I think the market is going to do? I think the market will likely test out its highs. It has been hot. It is liking what Trump, like the whole indication of Trump. It could be the same thing as what happened before, but we shall see. I think that the market will likely push higher to test out its record highs. So that's what I think. Make sure that you hit the subscribe button. Thank you for sticking around to the end. I show you every single week on how to read charts in the simplest form possible. We keep it very simple. As you can see, our charts here don't have a whole bunch of lines drawn all over the place. That gets very confusing, very intimidating, but I want to show you you don't need all of that. All you need to do is look at what's happening with the current price right now. Look at what's happened in the past, last time it was at that price, and then you can make a conclusion on what it will likely do. And we set our 2 price targets every single time because we never know where the market is going to move. And because of that, if you know which ones get hit, you can make a better decision on the trajectory of the market. So that is it for this week. Make sure that you check me out on Instagram. I do have that there. Well, probably here. I'm new to this, all right? So I'm going to do this. Anywhere over here, we got my Instagram tag. So make sure that you follow me there. And if you've enjoyed these videos, make sure you look at the past ones, and I'll show you how to do this every single week. So in conclusion, the market is the market. I love it. Finance is cool, but make sure that you take care of yourself. Your health is your wealth. Drink your water, all right? Get your exercise and spend time with people that you love. These are the 3 things that I hammer home every single week, and do those and you will be just fine. All right. So until then, next time, I'll see you later. Peace.